What's going on, YouTube? Today is day number 5 of the $1,000 account challenge, and today I am up $21.56, or 1.98% of the total portfolio balance. If you don't know, my name is Gates. I'm taking $1,000, depositing it into a cash account on Thinkorswim, and I'm day trading options to see how far we can grow this account. I'm excited to announce that today we hit our first milestone. We have officially grown the account 10%. Up $100 from the starting balance of $1,000. So big milestone. I'm excited to see where we go from here. Let's review the trades that I took. 2 trades taken on the same stock. We're going to refer first of all to the day trade watch list and see what we had set up. Amazon was a short idea below 146 and was a long idea above 148. So here's 148 right here. We have a rejection of 148 at the open, and our short trigger placed at 146 is down here. That's going to be that big bold line that you see at the bottom of my screen here. So opening move, what did we get? Well, it's a gap up day, right? So that's something to note. On gap up days, one of the very first things that you always want to pay attention to is where is the previous day's closing price located at? It's abbreviated as the PDC. This is where the stock closed at the day prior. So if I zoom out, you can see Amazon consolidated closed right here around 147. So we have a green line placed at $147. This is important because you can look for strategies that day traders utilize known as red to green moves or green to red moves. In this case, this scenario, we have what is known as a green to red move. What that means is the stock opened up above the previous day's closing price. So it was a gap up day, opening up about 0.5% above the previous day's closing price, but then failed to hold the PDC as a point of support. So the stock essentially went from green, fell to red. Okay, so green to red. That is a strategy utilized by day traders. And the opposite would be true if it was a green to red move, right? The stock would just be gapping down instead of gapping up and then reclaiming the PDC rather than staying below it and rejecting it. So that's really important here because we know off of our watch list that rules that we can utilize watch list rule number 4 in this scenario. So we get a rejection again off of the long trigger at 148, rejection at the long trigger, a failure to hold the PDC as a point of support. So the stock then at that time goes from green to red. Additionally, on SPY, if we look at what SPY was doing at the open, it was also selling. So we had market backing as well. That's going to be 3 confirmations for you to take this trade short. 3 confirmations for you to take the trade short. That's why we went short on this prior to the break of 146. Even though our short trigger on Amazon is at 146, we had confirmation that this was falling and would continue to fall after the first 5 minutes. We had market backing, top trigger rejection, and green to red move. So we get the breakdown below the PDC, a couple minutes of consolidation here, and we wound up going short at the top of this candle on Amazon near the previous day's closing price with a stop just above the previous day's close. So I'm going to show you that exact alert here in the alert room itself. So I said Amazon green to red at this time, WW, right? Worth watching. Apple, and that was an alert on Apple. Then I give you the contract. So 9:33 a.m. before we even take the trade, I'm giving you the contract so that you can go ahead and prepare and load those contracts into your active trader system. 2 minutes later, I said no position yet, and then 2 minutes later, I'm going to take Amazon short here at 9:35 a.m. Here's your contracts as a reminder that we're taking. I give you my exact fill price, and I give you my exact stop loss. Stop loss at 147. So we're going to timestamp this, 9:34. That alert came out, I guess, at the turn of the minute at 9:35 as I was typing it. But look, where I took the entry at wasn't at the very top of this candle. It was more so, after we started to get a rejection. So if you see the alert come out at 9:35, I think what most traders did was wait for a bounce and then go short on these candles here, which would have given you around the same fill price as me on my entry over here. And then the stop loss being placed at 147. So at this time, our risk level from where we took the entry at up to 147 looks about like that. I'm going to remove this line for a second. Our risk level looks like that, and our potential reward down to the short trigger at 146, we know it's potential support. Our reward looks like that. So this is our reward amount, and this is our risk amount. Notice how the reward candle is much larger than the risk candle. That's going to be your proper risk management there in place. So quick stop out above. If it didn't work, we're going to close it. Otherwise, potential for high reward. And sure enough, we get the rejection of the PDC once more. This falls down towards the low of day or into a new low of day at the short trigger, which we know is potential support. So we wound up taking our profits there. Now, this did offer us 20% profits. I said offered about 20% on that one. Closed at 9:41 a.m. just so you can see. We'll timestamp that. Closed it on this candle right here. It's closer to the bottom of that candle than the top. And I wound up taking about 17% on that trade. So entry was 77 as noted up here, and closed it out around 90. If I had waited a couple more seconds, I probably could have gotten that 20%. But for me, it was close enough, right? And I was going to take the profits when they were offered. Now, as this started to continue to progress, as the price action continued to play out, the stock shaped up a pattern known as a descending triangle formation. And what this is a static line of support at 146, noted here, and a diagonal or dynamic line of resistance. So it's basically creating, this would be your high, this would be your lower high, this would be your lower high, this would be your lower high, all converging to a point, which is right here of the triangle. So lower highs being formed with a static line of support. At this time, this shapes up this pattern known as a descending triangle formation. So what I tell you is that Amazon short is still in play on a break below the short trigger level. Now again, I just remind you, the same exact contracts that we took earlier, still in play. And then I give you the chart, right? Amazon descending triangle formation. I say wait for a low of day break, and we go short on a retest after confirmation. We do this because we don't want to get faked out, right? So what I'm telling you when I say wait for a retest, we're looking for the breakdown initially. Boom, there's your breakdown, there's your confirmation, and we're going to go short on a retest. And that's exactly what we did. Now, I could have probably market bought this short on the move down there. And under different circumstances, if I had a bit more profit margin in my $1,000 account, I probably would assume there's this risk, take on a little bit more risk and go short market buying on the breakdown there. But this early in the challenge, I want to protect profits as much as possible, and I want to wait on confirmations as much as possible, even if that means that I potentially miss some moves. It's just a little safer to trade that way. So instead of me taking the short entry here, I do wait on this to drop, gives us confirmation. So here's your drop confirmation. This is your rally. We go short on the rally at 10:01 a.m. Again, we'll just timestamp that. I said waiting for the rally to take entry short on the descending triangle breakdown, right? We're getting that. And then 10:01, Amazon took my entry short, 1.0 fill price. Again, reminding you of the contracts, and your stop loss is 146. So what we have here, and I entered closer to the top of this candle, what we have here as far as your risk amount looks like that, whereas your potential reward down to or through, we're expecting a breakthrough. The low of day looks something like that. So not quite as much as earlier, but again, your reward amount still greater than the risk off amount. And this is going to be key moving forward. I'm going to keep reminding you of the reward amount versus the potential risk amount. So we do get the curl over down here into the low of day, and I just wound up taking my 10% profits on Amazon short. Give you the contracts, entry price, exit price, 10:04 a.m. That was going to be right here. So the reason why I took my 10% when it was offered was because I'd already taken the trade earlier near 20%, and I want to just continue to build up this profit margin when it's offered. I don't want to sit here and be greedy on these trades. Had I held, it would have reversed on me anyways, and I probably would have cut it for a loss as it reclaimed up there. So I think I made the right choice by taking those 10% profits when they were announced, right? And I tell you, you can take profits or hold. It's up to you. You should be, I think, they did run about 15%, should be up about 15% there. So that pattern is known as a descending triangle formation. It is the exact opposite of an ascending triangle formation, which I detail in the guides channel of the Discord server. So if you don't know what an ascending triangle is, go to the guides channel, watch the clips there, and then just reverse that information for a descending triangle. So 2 key takeaways today: how to trade the descending triangle formation, or how to identify it, what it looks like, and then also what a green to red move is and how to trade it and what it looks like. Okay, press that like button for me if you haven't done so already. Thank you so much for watching this content. It is the best way to support this type of work that I do, by just pressing the like button. It doesn't cost you anything. And if you haven't done so already, subscribe to the YouTube channel. I plan to continue to make these breakdown videos, and I think that there's a lot to be learned from them, especially if you watch every single one and take notes and just kind of compile this information as we move throughout this challenge. Again, thanks for watching. Take care and enjoy the rest of your day. Cheers.